They told you that paper money was dirty, that coins were heavy, that cash was for criminals and tax cheats and people with something to hide. And then, very quietly, they built a cage around your bank account and handed the keys to someone else. This isn't a story about convenience. It's a story about control. Because somewhere between the invention of the credit card and the app that lets you split a dinner bill, something fundamental changed. Money stopped being a thing you held and became a permission you were granted. And permissions, as history shows us again and again, can be revoked. Let me paint you a picture. It's a Tuesday morning. You wake up, check your phone, and your banking app won't open. Not just yours, everyone's. The message is vague. Something about system maintenance, something about security protocols. You need milk, you need gas. You reach for your wallet and find 3 credit cards, a driver's license, and a loyalty card for a coffee shop that closed 2 years ago. No cash, because who carries cash anymore? And then you wait. You wait for someone you've never met to flip a switch you can't see and give you back access to money you already earned. That feeling, that sudden vertigo of realizing you own nothing you can't access through a screen, that's the cashless cage. And you're already inside it. The war on cash didn't start with a declaration. It started with a whisper, a suggestion. The first credit card was introduced in 1950 by Diners Club. It was a piece of cardboard, a curiosity, a tool for businessmen who ate at expensive restaurants and didn't want to carry large bills. Within a decade, it had evolved into something else entirely. By 1970, you had Bank of America mailing unsolicited credit cards to millions of Americans. They called it the drop. They literally dropped cards into mailboxes without asking. The fraud rate was catastrophic. The theft rate was absurd. But the banks didn't care. Because they had figured out something crucial. If you could get people to stop using cash, you could see everything. Every purchase, every weakness, every habit. The psychology was brilliant. They didn't ban cash. They made it inconvenient. They made it embarrassing. Pay with a $100 bill at a store today and watch the teenager behind the counter panic. Watch them hold it up to the light like you just handed them a forgery. Watch the line behind you grow restless. You feel it, the social pressure, the implication that you're doing something wrong, something suspicious. And so you reach for the card. You tap, you swipe, you smile and say, "Sorry about that." And another link in the chain locks into place. But let's rewind further. Let's go back to the moment when physical money became the enemy. 1933. The United States is drowning in the Great Depression. Banks are collapsing. People are starving. And President Franklin Delano Roosevelt, just weeks into office, does something unprecedented. He issues Executive Order 6102. It makes it illegal for American citizens to own gold. Not gold jewelry, not gold fillings in your teeth, gold coins, gold bullion, gold certificates. If you had more than $100 worth, you had until May 1st to turn it in to the Federal Reserve. The punishment for keeping it? 10 years in prison. A $10,000 fine. That's almost $200,000 in today's money. Think about that. The government made it a felony to own a chunk of metal. Why? Because gold was money, real money, the kind you could hold, the kind that didn't need a bank, the kind that didn't require permission. And if the government was going to print its way out of the depression, if it was going to inflate the currency and devalue the dollar, it needed to make sure you couldn't escape into something they couldn't control. So they took it. They called it patriotic. They called it necessary. And most people obeyed. Because most people always obey. Here's the part they don't teach you in school. The government didn't just confiscate gold. They revalued it. Before the order, gold was worth $20.67 per ounce. After the order, After they had collected it all, they changed the price to $35 per ounce, an overnight increase of almost 70%. So if you turned in your gold like a good citizen, you got $20 per ounce. And then you watched the government immediately declare that same gold was worth $35. They stole 40% of your wealth in the span of a year, not through taxation, through confiscation and revaluation. It was the largest wealth transfer in American history, and it was perfectly legal. Now fast forward to 1971. President Richard Nixon is on television. It's a Sunday night in August. He's sweating under the lights. He announces that the United States will no longer convert dollars to gold. The last thread connecting American currency to physical reality is severed. The dollar becomes a pure abstraction, a promise backed by nothing but the military and the inertia of global habit. And from that moment on, money is whatever the government says it is, which means it can be printed, it can be inflated, it can be diluted, and it can, if necessary, be controlled. Because here's the secret they don't want you to understand. Physical cash is a limit on power. When you hold a bill in your hand, that transaction is final. It's private. It's irreversible. No one can take it back. No one can see it. No one can tax it retroactively or decide you weren't allowed to spend it that way. It exists outside the system. And systems, by their nature, hate anything that exists outside them. Enter the Central Bank Digital Currency, the CBDC, the final evolution of this very old plan. If you've heard the term and felt a vague sense of unease, trust that instinct. Because a CBDC isn't money, it's a weapon. Let me explain the difference. Cryptocurrency, the kind you hear about on the news, is decentralized. No single authority controls it. It exists on a distributed network. You can criticize it, you can call it volatile, you can call it speculative, but you can't deny that it operates outside government control. That's the entire point. A CBDC is the opposite. It's centralized. It's issued by the central bank. It's monitored by the government. It's programmable. And that last word, programmable, that's where the nightmare lives. Because programmable money means money that comes with conditions, money that expires, money that can only be spent on certain things, money that can be turned off. Imagine this. You criticize the government on social media. Not a threat, not a call to violence, just a criticism, the wrong kind of criticism. And the next morning, your CBDC wallet is frozen. Not forever. Just for 72 hours. Just a warning. You can't buy food. You can't pay rent. You can't put gas in your car. You call the bank, and the bank tells you to call the government. You call the government, and they tell you it's an automated system, a security protocol. You'll get an email. Maybe. Or imagine this. The government decides that carbon emissions are a crisis. They're not wrong. But the solution they choose is to limit your spending. You get a carbon allowance. Once you've spent it, your money stops working on anything that exceeds your quota. No more flights, no more gasoline, no more red meat. Not because you can't afford it, because your money has been programmed to reject the transaction, and you have no recourse, because it's not theft, it's policy. This isn't speculation. This is already being tested. China launched its digital yuan in 2020. It's been rolled out in multiple cities, and it comes with features. The government can see every transaction. They can expire the currency if it's not spent within a certain time frame to encourage consumption. They can link it to the social credit system. If your score drops, your money doesn't work the same way. You can't buy a plane ticket. You can't send your kid to a private school. You become a second-class citizen with first-class currency that only works at second-class establishments. And the West is watching. The European Central Bank is exploring a digital euro. The Federal Reserve has published papers on a digital dollar. They call it innovation. They call it efficiency. They say it will help the unbanked. They say it will reduce crime. And maybe it will. But it will also reduce you. It will reduce you to a data point, a transaction history, a behavior pattern that can be predicted and, when necessary, corrected. Let's talk about negative interest rates, because this is where the plan becomes crystal clear. In a normal economy, you put money in a bank, and the bank pays you interest. Not much these days, but something. A small reward for letting them loan out your deposits. But what happens when the economy is broken? When growth stalls? When deflation becomes the fear? Central banks start talking about negative interest rates, which means you pay the bank to hold your money. Your savings shrink automatically every month. Now, here's the problem. If interest rates go negative, people pull their cash out. They stuff it in mattresses. They buy safes. They convert it to gold or land or anything that doesn't evaporate. And this breaks the system, because the system needs your money in the bank. It needs it flowing. It needs it visible. It needs it available for taxation and monitoring and, when necessary, confiscation. So how do you implement negative interest rates if people can just withdraw cash? You ban cash, you make it illegal or obsolete. You make it so inconvenient that only criminals use it, and then you criminalize them for using it. You force everyone into digital accounts where their savings can be quietly eroded, where 5% negative interest doesn't feel like theft because you never see the bills physically shrinking. You just see a number on a screen slowly getting smaller, and you accept it. Because what choice do you have? The war on cash is a war on autonomy. It's a war on privacy. It's a war on the idea that you can exist economically without asking permission. And the architects of this system are very patient. They don't need to ban cash tomorrow. They just need to make it irrelevant. They need to wait until the generation that remembers what cash could do dies off. They need to wait until your children think of physical money the way you think of rotary phones, a relic, a curiosity, something their grandparents used. Look around. How many places still take cash? How many parking meters? How many toll roads? How many vending machines? The infrastructure is being dismantled piece by piece. And it's being dismantled because every time you use a card, someone makes money. The payment processor takes a fee. The bank takes a fee. The credit card company takes a fee. And the government takes data. Your purchase history is a psychological profile more accurate than anything you'd ever volunteer. They know your vices. They know your politics. They know your health problems based on what you buy at the pharmacy. They know your relationships based on where you spend money on Friday nights. They know you better than you know yourself. And knowledge is control. There's a reason tyrants throughout history hated gold, hated cash, hated anything that could be traded outside official channels. Because black markets aren't just about crime. They're about freedom. They're about the ability to trade value directly between human beings without an intermediary taking a cut and a record. Every dictatorship, every authoritarian regime, every failed state has tried to control the medium of exchange. Because if you control the money, you control the people. The Soviet Union tried to ban private trade. They called it speculation. They called it hoarding. And people traded anyway. They used cigarettes. They used vodka. They used anything that held value. Because the human instinct to exchange, to barter, to build wealth outside the system is older than governments. It's older than currency. It's primal. And it's the one thing that terrifies centralized power more than anything else. So what do? How do you protect yourself when the cage is already built and the door is swinging shut? You hold cash. Not all of your money. Don't be stupid, but enough. Enough that if the system freezes, if the grid goes down, if your account gets flagged by an algorithm you'll never meet, you can still survive for a month, maybe 2. You keep $20 bills. You keep small denominations because when things get bad, no one can make change for 100. You diversify. You hold assets they can't confiscate digitally. Land, if you can afford it. Silver, if you can't. Tools, skills, relationships with people who produce real things. Food, water, energy. Because when the currency collapses, and it always does eventually, the only things that matter are the things you can use or trade. You learn to live smaller, to need less, because every need you have is a lever they can pull. Every subscription, every automatic payment, every service that requires a functioning digital infrastructure is a point of vulnerability. The man who can grow his own food, fix his own car, heat his own home, that man is free in a way that no one staring at a stock portfolio will ever understand. And you remember that this has all happened before. That every empire that debased its currency, that inflated its money supply, that tried to control its people through economic manipulation, collapsed. Rome, Weimar, Germany, Zimbabwe, Venezuela. The names change. The mechanisms get more sophisticated. But the pattern is always the same. They print, they inflate, they control, and then it breaks. And the people holding physical assets, the people who opted out, the people who kept their wealth in things that can't be deleted with a keystroke, those people survive. The cashless society is sold as progress, as evolution, as the future. But it's none of those things. It's a return. A return to feudalism where you don't own anything, you just have access, where your labor is converted into digits that can be revoked, where your freedom is contingent on your obedience. And the cruelest part is that most people will walk into this cage voluntarily. They'll do it for convenience, for rewards points, for the seamless, friction-free experience of tapping a card and moving on with their day. But convenience is a trap. It always has been. Every technology that makes life easier also makes you weaker. Every system that removes friction also removes choice. And every society that trades freedom for comfort ends up with neither. The cashless cage isn't coming. It's here. The walls are up. The surveillance is active. The infrastructure is in place. All that's left is for them to close the door, and they will. Not with force, not with announcements, but with patience, with gradual shifts, with cultural pressure and technological obsolescence and the quiet assumption that this is just how things are now. Your children will never know what it meant to hand a stranger a bill and walk away with something of value. No record, no trace, just two people exchanging the product of their labor in a moment that belonged to no one but them. They'll never know that feeling because we're letting it die. We're letting it die because we're tired, because it's easier, because everyone else is doing it. But you don't have to. You can hold cash. You can use it. You can insist on it, not because you're paranoid, not because you're a criminal, but because you remember that freedom isn't free. It's not granted. It's not guaranteed. It's a muscle that atrophies the moment you stop using it. And the moment you hand over the last piece of financial autonomy you have, the moment you accept that all your wealth exists only as permission granted by institutions that don't answer to you, that's the moment you stop being a citizen and become a subject. The cashless cage is real. The door is closing, and the only question left is whether you're going to notice before it locks.